Okay, good morning, everyone. Welcome to the AM edition of Traders Espresso for Tuesday, February 13th. Dollar down. U.S. index futures are down. Asia was up. European bourses were up, with the exception of the UK, which was, I'm sorry, European indexes were down, with the exception of the FTSE, which is the UK index was actually up. Japanese index was down. They were on holiday yesterday, so the Nikkei was down. As of this hour, the Dow futures are down 0.6%. The Nasdaq futures are down 0.75%. The S&P futures are down 0.5%, and the Russell 2000 futures are down 0.7%. Gold is up slightly, 13 basis points. The 10-year futures on the 10-year note are up 12 basis points. Volatility is up almost 6% on the cash index and or I should just say on the index, and the VIX futures are up 4.36%. Oil is mostly down. Natural gas was up. Metals are up with the exception of silver. Copper's up, which copper is generally a barometer of the health of the global economy. So I think traders will see that and take that as a sign that, not just concerns about growth domestically rising are causing interest rates to spike up in the U.S., but also just global economic growth as kind of the overall backdrop. The NFIB Business Optimism Index came out at 6 a.m. Eastern Time, and that was a 106.9 print against 106.2 expectations. A higher number is better, would be bullish for the dollar, would also be considered kind of good news is bad news for the equity markets, because that is the Business Optimism Index is up. That means that businesses will be investing, hiring, growing. That will lead to overall economic growth, would lead to a overheating economy. Businesses using their tax breaks to hire more workers. I mean, you can see kind of where I'm going with this. Pay attention. I've said this yesterday. I'll say it again. Tomorrow morning, the CPI number will come out at 8:30 Eastern Time. That's going to be very closely watched, probably more closely watched than any CPI number has been in the last few months, with volatility having been so low in equities. Really wasn't anything anybody was paying attention to other than just confirmation that things are, everything's great. With concerns again about the economy overheating and the Fed taking a more hawkish stance on interest rates, that's going to potentially derail this equities rally. Earnings will be or have been in focus a little bit more this week, with things kind of normalizing. I don't know if I would say that they have returned to normal. I mean, volatility is still elevated. The VIX is at 27. The VIX futures are just shy of 27. Just last week they were, below 14, or 2 weeks ago they were below 14. So that's a, pretty big jump. The CPI consensus number is 1.9 on CPI, 1.7 with CPI X food and energy. If the number comes in right in line, that would be probably a coin flip for markets. I don't know what they would do. I guess it just depends upon what mood everybody's in. If the numbers are higher than that, that would trigger a sell-off. If the numbers are substantially higher than that, would trigger an ugly sell-off. If the numbers are less than that, that might trigger a relief rally, as traders, think this points to evidence that maybe the prospects of an overheating economy are just a little bit overblown. So again, tread cautiously, trade carefully. If you're a buy and hold investor, or if you're dollar cost averaging into this market, now is a great time to just continue doing that. If the market continues to sell off, that you'll just be getting in at lower prices. By long term, I mean you have 20 years or more to, till retirement. So that's kind of what I'm going to leave you with today. The opening bell rings in about 17 minutes. So good luck and good trading. Thanks for watching.